do we do the same as January, or do we somehow break out of this? I did quote something from one of your reports this month. You said, we are now in a different world where past activity does not reflect the present, which I thought was super interesting. But like, are we going to break the cycle? Because yeah, part of me is like, maybe I should like sell 10, 20% into January, because something will probably go into a bear market. But like, if I was wrong, I'd be obviously disappointed.
Yeah. I mean, like, even with, like, let's talk about the ETF, right? We've got now, is it 2 ETFs, Valkyrie as well as
Yep.
the, what was it, the ProShares or something?
Yeah, ProShares and Valkyrie.
ProShares.
Was there another one, Bitso?
Yeah, I think, isn't that Bitto? Is that the code for
might be.
the ProShares?
Might be.
Yeah, there's a number of them, and like billions. Was it 1 or 2 billion was bought on the opening week? And if you were to say, okay, so $1 billion, let's call it a nice round $1 billion was bought on, the ProShares. Had that been a spot ETF or Bitcoin itself, $1 billion Bitcoin would have got bought.
I know.
But in this case, $1 billion of futures contracts got bought. So no Bitcoin got held. But what happens is the price of the futures skyrocket in relative to the spot price, and then some very sophisticated hedge fund type traders are going to come in, and they're going to run a cash and carry trade. They're going to buy the Bitcoin, and then they're going to sell the futures, and they're going to arbitrage the difference, because these quarterly futures often trade 20% above 10-20% above the spot, and then when that contract expires, they'll close at the spot price. So I buy spot, maybe at $60,000, and I sell the futures contract, which is maybe trading at $72,000. And then I know that I've made $12,000 of profit, because eventually when that expires in like 3-6 months time, 9 months, they'll be the same, right? And so that ends up being typically in Bitcoin, the cash and carry trade, 20, 25, is sometimes 30% of yield that these guys get. It's very, it's called risk neutral. There's no risk in it. And so now there's $1 billion was bought on a futures ETF, and no Bitcoin was actually bought. It was just contracts. And then these hedge funds effectively buy the Bitcoin, short it, and they're holding it in proxy for, you could see it as they're holding it on behalf of the futures ETF, and they're incentivized through this cash and carry trade, this nice fat premium. And that fat premium just got fatter because the demand on futures, and that's like 20-30% premium. So another way you could look at this is the futures ETF, $1 billion was bought. Only 700 million found its way to spot investment. 300 million got its way into the kind of the profit margin of hedge funds. And so you could have said that's like someone buying $1 billion and then someone else selling 300 million, like in a mining fee that's dumped back onto the market. Like, so that in itself says, with the futures ETF, there's large demand. You've got a sell pressure coming from futures incentivized fees in that whole food chain. That's significant. Like, that's starting to will rival the sell pressure of miners. So like, I am really thinking this whole mining cycle, 4-year cycle is very much coming to an end, because we've got very sophisticated instruments, ETFs, futures, derivatives. Even the Grayscale is 4% of the mining network that they deduct out of their stockpile of 650,000 Bitcoins, and then sell into fiat for their fat, paycheck. So that ETF alone, Mr. Barry Silbert and his Grayscale ETF, he is selling down as much as 4% of the mining network. And the mining network, they don't actually sell all their coins, right? So, that gives you a perspective of the kind of dynamics at play right now. So everything's different now.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information, and it helps us spread that message. Sharing is caring. And now, let's continue.
I don't understand, Willy. When you say about this cash and carry trade, they buy the future and then they buy the spot, and they essentially
sell the future by the spot.
Sell the future by the spot. Who they selling the future to?
The guy that's going long. the guy that's going long Bitcoin. If I think that Bitcoin's going to 100,000 by December 31st, and that contract is currently trading at whatever, 70 something thousand, well, I know that I'm going to sell at 100,000 in December. So I'm willing to buy that futures contract. And that's effectively the premium I pay is the cost of the other person selling you that contract. You're buying, it's basically funding, It's like if I wanted to buy Bitcoin that I can't afford to buy and I'm borrowing from the bank, you have to pay the bank interest. So you could do that via borrowing. That's called margin leverage. You can you can borrow money from the exchange and leverage. And that's what we traditionally had with, the early leverage we had with Kraken. Poloniex did that kind of margin. And then when BitMEX came out, they introduced futures. And futures is, a different contract where the funding rate in the calendar futures, at least, is built into the contract. And then there's a time value in the contract. And as it gets closer to expiry, it starts to taper down and down and down. That premium comes down. And that's really another view into the funding. You can just consider it funding.
So because these people are sat on large amounts of cash, they can sell the futures to you and buy the spot. And then that's a really easy trade.
No, they've bought the Bitcoin. So if Bitcoin goes up
and they sell
and they're shorting it, they're shorting it. They're like nothing happens. Like the Bitcoin price moons and you're shorting it. Well, your Bitcoin on the other side is mooning with it. So you're netting out at zero plus the decay in that contract. That contract value is starting to drop and drop and drop, and that's your yield. Remember, I'm buying it's $60,000 today. I'm buying $60,000 worth of Bitcoin, one Bitcoin, and I'm shorting one contract at 70,000. And so, I'm being paid because I'm selling it. I've sold this contract, so I've been paid $70,000 right now. I'm buying Bitcoin for 60,000. I've just pocketed $10,000.
Yeah.
And I know that they will, that contract will be worth whatever the price of the Bitcoin I'm holding is when it expires. So I know if I'm going to sit on this, by the end of that expiry, I've creamed the carry. I've creamed that premium, which is the $10,000. The only thing I have to do.
It's a total risk-free trade.
It's a risk-free trade if you consider fiat your golden light, and I value fiat, and I want some yield on fiat, US dollars. But if you're valuing Bitcoins, then you're losing against Bitcoin, and your wealth in Bitcoin terms is dropping. So traditionally, hedge funds from the traditional world will do the cash and carry trade because they're all about getting 20%. That sounds sweet when I can only get 1 or 2% in bonds. So that in their view, that's great. As Bitcoin, as we go, well, that's kind of shitty. And I mean, myself, I always have a partition in cash because cash just provides that nice buffer of liquidity. If Bitcoin's very volatile and we get a real crash, there's some cash to buy the dip. And I don't want to sit that cash in a bank. So maybe I'll do some cash and carry and get 20, 30, 40% to mitigate the money printing that's happening with the Fed. And so by doing this, the money goes back into crypto, you get the yield, and it's roughly enough to offset the Fed's money printing. So you're not subject to dilution and you've got a little bit of safety buffer. So I can even see a lot of crypto people, doing these kinds of trades to get yield on their US dollars. And a lot of people doing this on DeFi, which I haven't really looked too deeply into, but there's definitely a lot of yield to be done in there as well.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with first-hand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.